Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of the week's biggest stories in the mining industry. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it.
The gold price caught a tailwind this week as tensions between the US and Iran eased, first breaking $4,600 per ounce and then pushing well above $4,700. Silver was also on the move, briefly passing $82 per ounce. The situation in the Middle East remains fluid, but at the time of this recording, Iran was reviewing the latest peace proposal from the US. While President Donald Trump has expressed optimism about an end to the war, he's also talked about higher-level military strikes if the deal is rejected. At the same time, the Strait of Hormuz remains in focus, with strikes exchanged between the US and Iran despite the ongoing ceasefire. With so much in flux, what's next for gold and silver prices? This week, I heard from guests with very different ideas about the path forward for precious metals. First is Chris Temple of the National Investor. He believes gold hasn't yet bottomed and could fall as low as $3,500 before going up again. In his view, that turnaround hinges on what the US Federal Reserve does moving forward. Here's how he explained it.
I fear until we have a much bigger washout in the market and the Fed is forced off the sidelines and basically institutionalizes the idea that we all know already, that forget about their 2% inflation rate. It's a lie. It's been a lie for over 5 years. We're not going back there. If you average out inflation for the last 5 years, it's double their 2% inflation rate. And it's going in the wrong direction. So there will come a point where they have to panic. And as central bankers always do, you inflate away debt problems, you inflate away crises. And that's when the light will turn from caution to green again for gold.
Chris's price call for gold is in line with levels mentioned last week by Gareth Soloway of verifiedinvesting.com. He said $3,500 would represent a buying point for him. On the flip side, I also spoke with David Hunter of Contrarian Macro Advisors. He's a much requested guest, and I was excited to hear from him for the first time. David sees a broader market melt-up unfolding in the coming months, with gold hitting $6,800 during this run and silver reaching $180. After that, he expects a global bust, followed by a strong period for commodities that takes prices even higher.
I think today may have been that turn back up, that we've completed the consolidation, and we should see a pretty fast run, meaning over the next few months, 3, 4, 5 months, with silver going from, the mid-70s here up to 180, and gold going from, where it is now up to 6,800. Post-bust, gold can get to 20,000, as I said, and silver can get to 1,000. I had thought 500 was going to be kind of a crazy number, and after seeing what we've seen this year, I had to raise it. And I think silver at 1,000 may sound crazy, but I think that's very doable for, early next decade.
I'll leave the links to the interviews with Chris and David in the video description. I definitely encourage you to check them out, and I'd also love to hear what you think about their predictions for gold and silver. Leave us a comment below with your thoughts. Oil fluctuated this week, with both Brent and West Texas Intermediate crude spending time above the $100 per barrel mark once again. Prices for the energy fuel have been volatile since the Iran war began, and Reuters reported this week that bets on falling oil prices came in at $7 billion in March and April. According to the news outlet, well-timed trades spread across those 2 months have led to calls for regulators to investigate. In one example, unusual trades were executed on March 23rd, just minutes before Trump said a tax on Iran's oil infrastructure would be delayed. A source familiar with the matter told Reuters that the U.S. Commodity Futures Trading Commission is looking into it, and an ABC report states that the Department of Justice is doing so as well. Neither of those entities has commented at this point. On the note of inflation, major miner Gold Fields said in its latest quarterly results that it's on track to meet its full-year production and cost guidance. However, the company noted that a variety of the commodities it uses in the mining process have seen sizable price increases since the Iran war began, with diesel in particular going up. Gold Fields said it's risen 30 to 70% since February. Management will be looking at ways to control costs, but for investors, it's a reminder to keep an eye on the impact of the conflict at the portfolio level.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.